Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. Thanks so much for joining me today. A lot going on in the market today. Might get a little bit of profit taking today, but I'm pretty sure we'll be able to find some stocks to buy. As promised, we're going to talk about Tesla's earnings. And the number one question we get all the time is, why did a stock that had good earnings go down? That's a really big question. And we actually have a pretty obvious answer for you right now. We're going to talk about a bunch of things. There's a bunch of earnings that came out yesterday. We got a lot of stuff to talk about as far as rotation. Everybody knows that we start out with this every day. This is the foundation of everything that we do. You can see over the last 5 days, everything is green. What a change in the picture from even just a week ago. And the biggest thing I want to talk about, and I want to start out first with this, which is if you are able to recognize when market conditions are less than perfect, and you don't buy stocks, or you have the right position sizing, when the market turns around like this, and the SPY now had 6 consecutive positive days, instead of digging yourself out of a hole and getting back to even, you are net profitable. So if you learn nothing else from being a part of our community here, is that not every situation is the same, and it requires different position sizing, different profit targets, and different ways to hold the trade. Sometimes you get a push and a pause and you're out. Sometimes you get a push and a pause and you're adding for the next move. Big part of our coaching call last night to discuss that. So stick around. I'll be back in 1 second. We have a lot to talk about today, especially those Tesla earnings. They're confusing some people, and we're going to make sure that we dive into that today. Okay, so first I want to say, obviously, everything that we're doing here is for educational purposes. It's up to you to make a good decision. It's up to me. It's my mission to help you make better decisions. I see a few people in here today that are new to the boot camp. Congratulations. You're going to be involved with a really amazing group of people. We get letters and emails every day from people in the boot camp that learning stuff that they had no idea about how different chart reading and trading was. So many of us focus on, I want to be a better chart reader. I want to be a better chart reader. And that's actually the reason that a lot of people are held back. Really smart people trying to learn every indicator that's out there. Chart reading is not trading. There's a giant gap between the two. And when you come into the boot camp, for those of you that just signed up this week, which has been quite a few people, I just want to say, first of all, I want to say thank you very much. I promise to over deliver. That I can tell you. I'm kind of well known for how hard I work, so I promise to over deliver. But I want you to know how grateful I am that you invested in yourself and you're getting into the next step now. So it looks like Barry signed up with us this week. I have to pull this up. Barry, thank you so much. I'm actually looking forward to working together. I've never heard this quote before, but I love it. I was poor, but not anymore. All right. I love that rhyme. I think a lot of people are having a good month in Bitcoin. It does look like we have a little bit of profit taking, though, after we hit that new level. What was it? Just over 65,000, I think, something like that yesterday. Let's see. Don Postma, good morning. How's it going? Good morning to all. Join the boot camp. All right, Justin. Awesome. LJ, always a pleasure to see you. Thanks so much for joining us. I really appreciate it. John A. Let's see what John's got to say today. Futures down. Coin, the tattooed chef, worth checking out. All right, we'll take a look at those, John. Good morning. Let's see. Shane Eaton. You know, Shane, I got to be honest with you. Every time I see your name, Shane Eaton, I think of Sheena Easton. I don't know why. Maybe I'm a little bit old. I don't know. Myers, good morning. Good morning. All right. Yeah. Barry, the biggest advice I can give you, and this is a question that we get asked quite a bit, regardless of your experience level, and this is for everybody, just to give you like an idea. One of we have a bunch of education here. There's hours and hours of training, and then there's obviously the real-time trading that we do together. But by far, the fastest way to get up to speed and to really start understanding order flow and tape reading, which is watch the replays of previous game plan meetings, which we have every day at 8:30 in the morning, because those are usually 50 minutes of us talking about why something's a great idea and how to trade it, versus you call out an idea and we have a discussion about why it may or may not be a good idea. So that's the game plan meeting replays are really big, and the coaching calls. The coaching calls are a huge part of what we do because you have the training, you have the coaching calls, and those two things combined put you into the game plan meeting and then into the real-time Discord community. So if I can give you some advice, Barry, to get started right away, definitely watch, especially over the weekend when you kind of relax and everything, definitely watch the coaching, the game plan meetings and the coaching calls. Last night's coaching call did a deep dive. You know what? I'll actually, I want to show you some of the topics because it's kind of cool. And I want to bring this up to everybody for one reason and one reason only. I want you to understand trading is so much more about just tell me the one thing. And I want to show you the list of the things that we spoke about on last night's coaching call. And we actually have multiple coaching calls during the week, some for beginners, some for advanced members. Look, there's always a higher level that we can all get to. And I want to inspire this. This is the big thing that I want to talk about. I'm not selling the boot camp. Only you could make a decision that if you want to invest the $295 in yourself. So this is not a sales pitch. I'm using this as a way of mentoring you to think deeper. Remember, we talk all the time about the more distinctions you could make and the more angles that you hit what you look at, the more opportunities are going to open up to you. So I'm actually going to show you last night's coaching call and the questions. So if you can see here, I'm just going to zoom this out a little bit. These are the topics that we discussed last night. So we talked about winning trades. We talked about how to build a watch list, how to add and delete stocks from your watch list, why the engulfing candlestick is important. Something as simple as that, understanding reversals, using the VIX effectively to decide as a secondary indicator being long or short. The three lines that we draw in the tick readings that I don't think anybody does, which are kind of unique. Building an earnings argument based on industry group. Obviously, earnings right now is a monster part of trading. All right. How early should you buy for day trades? That's a really good question we talked about last night. And I think this last one here is probably the one that maybe we could tackle today is why is trading so easy at 9 p.m. at night? So in other words, why is trade, like you look at charts at night, raise your hand, type in yes if this has been you. It's 9 o'clock at night and you can see everything, every bull flag, every entry, every exit, every profit target, everything in the market. Everything looks perfect 9 o'clock at night, but for some reason we have a mental block. We can't see that during the day when it's unfolding. And I'm going to walk you through that right now because I remember I went through that very vividly. I actually, on that call last night, I had that same thing. I remember where I was living when it was like, I don't know, it probably wasn't 9 o'clock at night, but I was actually angry. I was like, I don't understand. Everything is unfolding here perfectly. You go and you do your bar by bar practice and you're like, how come it looks so perfect here now? And why can't I see it and execute it when the market's open during the day? And here's the key. And I'll give you like the answer that we talked about last night. You need to have definitive, if this happens, then I'm doing this. If this happens, then I'm doing this. Too many people chase price spikes. Too many people chase alerts as opposed to, and this is the big thing, the first 90 minutes of our day, I am on the microphone, just like this, and I'm talking during the day, and I'm getting you inside my head. It's probably one of the most valuable things that we do. So I'm kind of giving that to you right now. When we're watching the market during the day, and me specifically, and again, if you don't know my background, I had a trading firm in New York City. We had 300 people, and this is what I did for the people on my floor. So I want you to start doing this. This is kind of a mentoring moment right now. You need to look at everything that's on your screen. So if we're watching the VIX, we're watching the ticks, we're watching the sector ETFs, we're watching the sector ETFs on hourly charts over 3 days, on the daily charts, then we're watching our individual stocks on an intraday basis. All day long, we're saying, if this happens, and then if that happens, then I'm doing this. If this happens, that happens, then I'm doing this. That's how you are in position to take advantage of all the trades, because then if you're watching a stock, you know what you're going to do before it happens. It's when you're reacting after the fact that you're like, oh gosh, the stock just ran $1.50 and I missed it. We actually had one situation yesterday. I'll just walk you through it, which I thought was kind of cool because it actually made me sit up in my seat. I'll actually pull something up. I just want to give you this. Let me see if I can find it really quick. Here, I'm going to pull this up and put this on the screen because it was kind of I'm going to bring this in and I'm going to make it bigger. So one of the things that we look at during the day, and I know I'm turning this into a mentoring session. I hope everybody doesn't mind that. One of the signals that we use during the day, one of the market internals, a part of, we have those three pillars, right? We have stacking the order flow. we have tape reading, and we have risk reversal. A part of stacking the order flow is understanding how to use the market internals. And this is one of the situations from yesterday morning where we noticed that the tick readings up until around 10:45 yesterday, and even a little bit past that, did not push below zero at all. So it was one of the things that I pointed out to everybody in the community. I said, these are the kind of situations where when the market conditions are perfect, and again, everything starts with perfect, you work your way for perfect, and that's where you change your position sizing. When it's perfect, you need to understand when you should trade bigger, when you should hold longer. So this gets back into recognizing stuff 9 o'clock at night. If you're not running all these things through your head while the market's open, and it's not difficult, and I'm going to tell you how you can do it like that. You have to learn how to do it. First, you need to understand what's on your screen. And obviously, that's a big part of what we do in the boot camp, right? Let's say you have that on your screen. Think about the first time you were driving a car. You're in your car and you're like, oh my gosh, I don't want to crash. I just want to stay in the lane. And like, you can't even look at anything. You're just frozen on the lane. You want to stay in the lane. If you're like me, we just looked at the end of the hood just to stay in the lane. But then within a couple of months, you got your arm around your girlfriend, you got the radio on, and you drive 3 miles and you don't even realize that you made all those decisions. I promise you, once you understand what to look at, all that stuff I just mentioned becomes second nature. But first, you need to understand how to make that as efficient as possible. So getting back to what we're talking about over here, and this is answering that question about why do I see everything at night, but I can't see it when it's unfolding. It's because you need to know what to look for. You need to understand how to spot it. It's not enough. Oh, it's above the moving average. That's not a trade idea. That's an observation. So what we were talking about here yesterday, and I kind of like jumped out of my seat when it happened, we were positive, right? But we weren't pushing into tick readings that were significant. They were positive, but not significant. And that's a part of the fact that the market was up 6 days in a row. So what does that mean? That means that if we're not punching up to these bigger tick readings during the day, we're still looking for longs, but less stocks are making new highs. Less stocks are punching higher. So that was a part of adjusting yesterday towards what kind of share size should we be looking at? What kind of position sizing and profit target should we be looking at? So these are the kind of adjustments that you make same thing when you're driving, stepping on the gas, open road, foot on the gas, foot on the brake. That's a part of trading. So remember, chart reading is not trading. So we spotted this yesterday. We called that out and we said, until that changes, if that happens, then do this. And I'm talking everybody through this during the day. But here's the cool part. Helena in our community last night actually brought up the question, which was in our coaching call, because I mentioned it. And that's the whole point of me doing like the audio broadcast during the day is I want you to think and act like a professional trader so that you know the steps and eventually they become habit. So something happened yesterday in the VIX where all of a sudden we were just kind of dancing around, and it was good trading, not necessarily awesome trading because of what we just showed. Here's the big thing. All of a sudden, the tick reading spiked up and it went up to the highest reading of the day. And I'm like, all right, that was significant. Let's pay attention to that. The VIX readings were doing something significant. The ETFs were doing something significant, the sectors. Then immediately, right after that new high, it made a new low on the day. Two extremes within, I think, 15 minutes, within 10 minutes. And I was very clear to everybody in the community. That was significant after the last 5 days, after the way the market traded this morning, after it just made new highs, and after it just punched down to new lows. And I'm specifically talking about the tick reading combined with the way the market was trading. I said that was the top. That was the top in this bullish run because that extreme from one to the other just shifted all of the buying and selling pressure to neutral at best. And if you take a look at the market for the rest of the day, which we'll hop on over to that chart right now, I'll show you exactly where we were talking about and specifically on the SPY. So you can see after that initial price action during the day and the market was showing you those readings that I just showed you in the ticks, right? So if we go back over here, you can pretty much see the first 90 minutes of the day, kind of neutral, but still decent readings. And that's what we're looking at here. And maybe I'll put this on the 15-minute chart so you can see it a little bit better. The bullish gap up into 11 o'clock. Once that shift happened in the market internals, I called it out to everybody, and then we shifted our expectation for follow-through. So what we end up doing when that happens, and you can see that right in the price action. So how does that act, right? It's not enough to just say, I understand charts, I understand Fibonacci, I understand stochastics and RSI. All that stuff is secondary to what we're talking about here. This is about making trading decisions. This is about shifting to step on the gas versus on the brake, and now you're in stop and go traffic, and how do you handle that as a trader? And these are the kind of things that we're talking about, and I'm doing this for you in real time so that you could eventually get to the point where you're recognizing this by yourself. So when that happened during the day, we all shifted, and then we went industry group specific, and then we started to look deeper into our watch list, which was another question from last night that I think I showed you before. How do you add and subtract stocks into your watch list? Now, actually, I'll give you one of the answers. One of the questions that I believe Finviz on the call right now, which was a really good question, which was, how do you know when to take stocks out of your watch list? And is it common to do that? A lot of people have this misconception that, the same stocks are in there all the time. No way. Again, when we're doing the sector rotation and we're tracking this every single day, we're putting stocks in, we're adding stocks, we're following the smart money, we're piggybacking what's obvious. Some stocks stay in, some stocks stay in for weeks, then other rotation. Because if you remember, energy stocks, I'll just highlight it over here. Energy stocks were on fire. They were at the top of the list. We got about 6 weeks of trading. And again, this is why we track this every day. All of a sudden, industrials, basic materials, financial, technology starting to work their way up. So what does that mean? That means that we're paying attention to the order flow and the tape in the energy stocks, which were on fire. They've cooled off a little bit. We paid attention and piggybacked on technology, basic materials. Industrials are starting to work their way up now. So as you start to pay attention to that rotation, it becomes infinitely easier to be in the right stocks where you can expect follow through because you're not guessing. We are literally looking for stocks where the smart money already has attention, and then we're looking for a spot to catch a ride in that direction. Then we're also paying attention to when the tape changes and then stopping. And I'm going to show you an example that we talked about last night where it's from last year actually, but you'll get the idea. When the market's obvious and it's flying, you need to make what you're supposed to, because if it's doing this, then I need to trade good. If it's trading this, then I need to trade well, trade good. When that changes, you need to adapt how you're trading. So everything doesn't look the same all the time, but you need to understand when it's obvious, and then you need to understand when it changes. If you think every trade is the same, you don't have a strategy. Write that down. That is a big deal. If you trade the same share size all the time, you don't have a strategy. There's different methods of trading differently. It's, again, keep in your mind, when you're trading today, see if it happens. Am I in stop and go traffic? Or is the road wide open and I should be looking to add to this position? Or are we all rubbernecking and I shouldn't even be in a trade at all? Keep that in mind when you're trading today, and it'll help answer that question. How do I recognize when it's obvious, and what do I do about it? Because if you have that in your head prior to the trade, it becomes easier to be in the right trades. As a matter of fact, it also becomes easier to do nothing, which a lot of people have a problem doing. And it's probably one of the things that we talk about all day, quite honestly. If there's nothing to do, we do not trade. I don't trade penny stocks. I am all about being net profitable. And I hope you are learning that from me here in these YouTube videos, because that is what makes the difference. I can't stress this enough. As a prop trader, managing thousands of people when I had my trading floor, if you understand not digging yourself a hole, it becomes a lot easier to see your account go like this. But you need to learn these steps first. So hopefully you're learning them here. But if you want, again, we had a lot of people join the boot camp this week. I'm very excited to have you on the other side. So I want to show you that one chart that I was just talking about, and I'll zoom it out a little bit. I'll pull it up over here, and we're going to go here, because one of the ways of identifying when stocks are obvious versus when they change, this is JKS from last year. This is not like 1999. This is last year. So when you start to see price action like this unfold, you are required. You need to step up and say, it's doing exactly what I thought it was going to do. I need to make money because right now it's obvious. But you then need to recognize when the tape changes, and we'll go over to the same time period, which is over here. So when the tape changes, we generally can spot it on higher time frames. So you can see how obvious it was for 5 or 6 weeks, and then the tape became a mess. We started trading into melted candles. We were going back and forth with well bid, well offered, red and green. We stopped, went to a different sector, and maybe they're perking up a little bit now. You can see the weekly chart is actually getting a little better. So does everybody understand what I mean by that? Everything I just discussed is what makes you different. when you start, I'm sorry for pointing. When you understand that chart reading is not trading, they're a mile apart, okay? When you start to become a trader, you start to script out your success. Number one, because you know what you're looking at. And number two, you build the habit of taking action as soon as you see what you need to see. The only other level that you need to get to is recognizing when more is available, or you should be looking for quicker profits. And we also have processes for that, looking at the market, the internals, and that kind of stuff. Remember, it's not overwhelming. It's actually kind of simple. It's just a question of you need to have it on your screen and then learn how to put those pieces together. Do you notice that? You notice that? You notice that? Oh, that's what that means. You notice that? You notice that? That means that's what I'm going to do. It's not chart reading. Chart reading is a part of what we do. You need to learn how to set the charts up, but you need to learn how to trade. There's a big difference. All right. I want to talk about Tesla today because obviously that's the big number. And a lot of people are asking, why is Tesla trading lower today? Okay. Record revenue and profits in the third quarter, right? So if we hop on over to Tesla and we see where it is right now, it's down $13. So let's first put the $13 into context. It's not even 2%, right? Not even 2%. But here's the thing. When we invest, and we're not talking about short-term trading now, when we're looking to invest. And by the way, we're having a fundamental analysis webinar next Wednesday. So I'll make sure I give everybody an update on that. Tesla met expectations. Let that sink in for a second, okay? They met the expectations for going forward. That's why the stock is down right now, okay? Right now, again, Netflix had the same kind of thing. It traded lower and bounced back a little bit with the market. We are not buying what they did. And a lot of people don't understand that when they're like, the EPS was this and the price earnings ratio is that and revenue was that. That's what they did. We're buying the next quarter, the next 12 months. So now we have to start seeing some earnings coming out, some headlines coming out from Tesla and Elon Musk along the lines of what's happening next, not what happened. That's a big deal. Also pay attention to the margins, the percentage gain, not just the number, the percentage gain. It's the same reason that IBM is down right now. We'll take a look at IBM right now. IBM is down right now because of the size of the gain, even though they beat. Those are the little distinctions that you need to pay attention to. And again, don't be lazy. Don't just look at, oh, the EPS was that, the revenue, the top line was that. How is it compared to growth rates? And how is it compared to the growth rate of what was expected? That's the single biggest question that we get, which is why did a stock that beat everything end up dumping? And IBM is a great example of that right now. They actually beat, but they did not beat what was expected. The numbers were lower for going forward. So we got a bunch of earnings today. Chipotle is coming out today. CMG, that's an amazing company. So we're actually going to jump into some ideas for today. So as we do every day, I want to make sure we leave you with some ideas. So we're going to focus right now on technology and financial. Okay, as we're rotating into these right now, we're going to focus on the top two, as it looks like the market is in a little bit of profit-taking mode. The Dow hit new levels yesterday. The SPY came within, I think, $1.50 yesterday of hitting new all-time highs. 4 gaps in 5 days in the SPY, just an amazing move, 6 days in a row, positive. Maybe a little bit of a breather today, but don't be lazy. You can still get in there and find some ideas. So we're going to look at technology stocks. Some of them are just breaking out, American Express being one of them. Some of them are a little bit extended. We're going to walk through those right now so you have some ideas heading into the day. All right. And again, please, if you could do me a favor, smash that like button if you find these videos helpful, especially on the mentoring side of things, and make sure you hit that subscribe button so you get updates. Okay. So we're going to go straight over into looking at some ideas for today. As promised, we're going to start out with technology. All right. Now, obviously in technology, coin and Bitcoin, we'd be remiss without talking about Bitcoin today. So let's actually talk about that for a second here. Bitcoin obviously exploding, and you can see now it traded into an inside pause here so far for the day, which is very early. So a little bit of a pause here, down almost 1,500 after hitting new all-time highs yesterday at 67,680. So Bitcoin working its way over into a Bitcoin mining stock. Again, Mara, we keep talking about this one every day. Not coincidentally, hit resistance yesterday up at that 56 level, pulling back a little bit more today. So again, we're watching Bitcoin futures, trading Bitcoin mining stocks. That's usually the process that we do. So Mara cooled off a little bit. So we're going to, and coin probably going to cool off a little bit today. So we're going to look at a little bit other financials. We had the bank stocks, which had earnings this week, JP Morgan, Morgan Stanley, Goldman Sachs, American Express, we're going to take a look at right now as well. So if we take a look at American Express, we had an alert set yesterday for American Express at 178. As of right now, it's still above that level. So we're going to be looking for continued follow through on the breakout in American Express. Asana, actually, we're sticking with the tech. You know what? Let me actually stick with the financial stocks. STT earnings this week, probably one of the better performers. Yesterday, the first day out of a pause after coming out of this breakout. So I will be looking for this to be a buyer on this lower opening. Let's see. LC is one. Hopefully you've been on top of LC with us this week and look like it's going to have a little bit of a higher opening. So I just want to be clear. Again, we spend a lot of time on the rotation, right? Right now, we're talking about the top two sectors that we've been tracking the order flow. It's financial stocks and technology. So I just want to give you full context. That's where we're focused right now, is stocks that are considered financial. So LC is in that list right now. BX had earnings, and actually you can see the earnings are pretty strong, actually bouncing. It's up to 2.4%. So we're looking for this to retest up into the 135 level. Schwab had a breakout. I will tell you from personal experience trading Schwab, Schwab is not a stock that generally has momentum. It can be obvious, but Schwab is probably one of those stocks where you need to shift over into using moving averages or a higher time frame, because it doesn't really have that clean flow to it doesn't really have pushes and pauses. It just kind of eventually gets to where it's going. But good earnings this week, as well as a breakout. So Schwab and Capital One is another one that's nearing a breakout level, which you can see here. This one, I want to see it get through that level, so it's got to get above 178, but that's a decent list. So we're also going to talk about JP Morgan. Hey, if you remember yesterday, we were talking about JP Morgan clearing this level. Now it's up 5 days in a row. Probably going to wait for a pause and then get above that level. So again, if you're a regular subscriber to the channel, or if you're in the boot camp, we spend a lot of time on trading game plan versus tracking journal. JP Morgan now would be a day trade through this level, waiting for it to pause. So it's in the tracking journal for a bigger trade after it's up already for 5 days. Goldman Sachs, very similar. Goldman Sachs earnings blew them out of the water. Just amazing, amazing earnings. And as we mentioned yesterday, it has to get above 415. So that's kind of the price action we're looking at JP Morgan. So we just talked about some ideas that are valid today and some ideas that are going into the tracking journal for next. So remember, one of the conversations we had today is, how do I recognize it when it's happening? We just did that. We just outlined the scenario. These are the stocks I'm looking to trade today. So I'll be in there actively looking for them. These are the stocks that I need to see certain price action before. So you set alerts. When it gets to that price, you already know what you're going to do because you scripted it out. I want to hop over into some technology stocks. Obviously, we just talked about a few of them, but let's get into STNE, which is one that we've been pointing out for a while. Looks like this longer-term downtrend has now broken, and now we're starting to see some positive attention on this. Now, remember what we talked about before. It's critical for long-term success to understand, do I go in with 2 bags full of money, or do I go in with the money that's in my wallet for my first part of the deal? In this case here with STNE, it's the first time it's reversing off of bearish order flows since July. Interesting, in the watch list, starting to build a position, but starting to build a position is the key. We've had a lot of conversations and a lot of questions of people asking about Zoom and some of these other stocks that got beat up. Why would you fight this when the last 2 weeks you could be trading something like this? Does it make any sense? Make it easier for yourself. Learn how to spot the smart money, piggyback, and just ride that until we see changes in the order flow. Bottom fishing is common. It's also common that it's not easy to see your account grow consistently. You remember the one time you bottom fished and it worked, and you forget the other 9. I'm telling you, I've been there myself. We kind of remember that one time averaging down worked, or that one time I caught the bottom. You forget about all the other 9 times you lost money when you could have been doing this instead. All right, so we're just using Zoom there as an example. Getting into a couple of more tech stocks. Asana, we've been preaching this one for about a week and a half now. Actually, no, since earnings over here, we've actually been trading it over here. FSLY starting to turn the corner just a little bit, right? You can see how we've been working the charts going into this range. We actually thought this box here was going to start a new downtrend. It didn't. We had to reassess, and we went into a new one. And net, obviously, that's the big one that we've been watching here for a while. So if I give you any suggestions for today, market's probably going to see a little bit of profit taking. Find ideas, even if they have a lower opening today, find ideas that are already strong and then look for spots to buy them. If they're swing trades, make sure they still have room to go, because remember, stocks have average true moves. How far of the average true move has it already taken up before you put that trade on? If you're looking at a trade that's already gone 5 days in a row and there's a 1-to-1 risk reward, if you buy that thing today based on what it normally does, 1-to-1 trades make you a break-even trader. That's not what we want to do. We want to expand that profit potential by learning how to find the order flow and then reading the tape to time those entries. So if you take nothing out of today, the biggest thing I think out of today is the fact that you have to acknowledge chart reading and trading is not the same thing, and there's other steps. So rewatch this video and go back to that beginning part where we started to talk about putting the pieces together using the ticks, the VIX, the sector ETFs. You'll at first, I'm telling you what's going to happen. At first, you'll be like, wow, this is a lot. And then within 2 days, you'll be like, how did I not watch this before? And everything just becomes easier. You have to learn how to put those pieces together. All right. I just want to answer some questions here. Is this topic written down in the boot camp? Yeah, it's in the lessons, it's in the coaching calls, it's stuff we talk about pretty much every day. John Bates, good morning, pal. Good morning. Good morning. How did you learn which metrics to work for in each industry? Experience. That's the only answer I can give you on that one. Using your parameters, Stone and LC. Yep, exactly, Lewis. That's awesome. That's a great job, Lewis. So you're actually taking it a step further and you're getting in there, right? Catherine, good morning, my friend. Markets can remain irrational longer. Yeah, 100%, which is also a big deal with people taking losses. People are like, oh, the market always goes up. Yeah, that might be true, but it might not be in the amount of time that you have in your account. Let's see, B-Bond. You can show pre-market price line on the chart if you want. Oh, okay, that's pretty cool. I don't happen to do that here, but thank you for that. I appreciate that. Let's see, LJ, good morning. Thanks so much. Dustin, very valued member of our community. He's been in the mastery program for a while. I appreciate you, Dustin. Thank you. And Raphael, of course, Raphael, thank you so much. All right, so I have to head over. We got to get ready for our game plan inside the boot camp. We talked about a lot of stuff today. We kind of saved the ideas for the end. We had a big talk about why Tesla's down, even though they beat. Same thing with IBM. Go back and watch that section that we did talking about putting the pieces together. And if you have any questions, let me know. If you want to take it a step deeper, like a lot of people did today, click the link below the video. You'll learn at least what's in the boot camp. It's only 30 days. It's not a subscription. You can decide if that's for you. Please do me a favor. If you find this stuff helpful, smash that like button. I'd really appreciate it. Hit subscribe. Have an awesome day, everybody. Be more than you ever thought is possible. Take that first step. Have a great day, everyone. I'll speak to you soon.